Good morning, MMTs. I'm going to show two weekly charts. One is going to be on the fear indicator that's breaking out to all-time highs. Okay, and I've showed it on a level of a daily level, but I'm going to show here where this VIX on this weekly level is. When we were putting in the tops, as all of us went through, we were putting in this weekly bottom, and we have gone to a peak of a high. This high here on the weekly is lower than the previous high. As we move through the month and the calendar trading days left in August, this fear indicator that we'll use a 60-minute chart with has to contract in value. It has to go down. If that goes down, then we're going to get back above some key levels here on the S&P 500. This is the last previous 5 days. This was the bottom here of that run. You can clearly see that we came up to the neckline of 1200. It was last week that we were talking about specifically during last week's trading range when we were leveraging back up. We got above that knife hook reversal above the 200 week. And we came to the neckline of the bottom of where that last part of the selling, the contraction to the low, happened here. We came up, we tested it. Last week we would say that you would have to sell in to any upside strength because bear market volatility, bear market trades below the 200 week is a bear trend. And bear market or bear trend bottoms have a different way of setting up. So that was the first week. This is the first week of it. This is the second week. You're closing below the 200 week moving average. Not good as far as that goes. Why? Because the selling, the closing down here, the 200 week moving average on the S&P is 1154. Okay, and you closed at 1123.53. Okay, so you're well below that 200 week moving average. What will end up happening is if we break these previous lows, that means that this weekly fear indicator is going to break higher. When market bottoms or trading range bottoms or trading range tops or in the mid-level part of the market, is that there's always going to be a trend equation called a mathematical number. You can clearly see here that if we break those last lows, the fear indicator could pop up here to these major levels. This trend line right up here, that would take out the last high. We would come up and test that part, and we could also come right over here in this area. And this is a significant area. And if we do break higher in the short term, we're going to be looking for a reversal. Like we got a big reversal here. That's what put in last week's, not last week, but the prior week's bottom, is when we have the reversal here, that big wick down. You can see it here. You can see that big wick down here in the fear indicator. When that fear indicator last week was coming down in value, this bottom up week, not last, this is not last 5 trading days, the previous, this week here, you can see 2 weeks ago that was selling off and coming down, and this was going up. Now the body over here in the fear is at 43.5, and you're closing below the 200 week. What will have to happen to know exactly what's going to happen on a 60-minute level between the fear indicator and the S&P 500 is that S&P 500 with that closing below this weekly moving average. And let us not forget that the current fear indicator is closing above its 200 week. And these things only happen in bear trends. The 200 week moving average over here is 26.9 is the 200 week. And you have just the opposite of the S&P. You've got the 10 week crossing above all its key moving averages as well. So that means that when we pull back, we're in an elevated fear level in this last 2 week trading range, which is part of this S&P 500 bottom. This is the top reversal that we called. We went through a month of resistance levels before we got that. This is 4 weeks now. Week 1, week 2, week 3, and week 4. That's 1 calendar month of trading, 20 trading days. There's 5 trading days in a week. And that means that when a short-term trend is going to change is that we look at the elevated fear, and the elevated fear is in this weekly VIX, which is tied to this S&P 500, VIX, Market Volatility Index, CBOE. MMTs, if we're to break down to the tenths into, let's say, when we break that 1100 handle, that means that this is going to continue its breakout. What we are going to be looking for on a 60-minute level for the trade management of having calls to go higher or puts to go higher is that where's the put to call ratio going to be between now and the calendar end of trading day of August, the dog days, is where is this whole thing going to balance itself? Right now, if we break higher, we can sell down and put a bottom in, and we would look for this reversal within the volatility. When you sold off and the fear indicator came down and hit the support right here at the lower end right here, that's when we put the top reversal in over here. We came all the way from that neckline, like I said, all the way back down here. So that's part of a bottom, is we haven't broke it, we still closed above it, but you're well below the 200-week moving average, and you're closing down here toward the lows, and this is closing, the fear is closing up on the highs. So on Monday morning, we're going to be monitoring very carefully how it sets itself up using a 60-minute chart. Okay? When I take a look at where the S&P can go, the S&P 500, I've given a complete lesson on fundamentals and economies around the world and forecasting around the world with MMTs and people in the school. I don't do that here on this video, but I'm going to tell you something right now. The way that the earnings contraction forward looking is that the S&P could come down here to these major trend lines. Right across here is that third one. That's this area. And if we break these lows, that's going to be support 1 right in here. There's a small support level right there. And these are going to be the critical lines. We are, as you can see, the weekly sell signal is getting to a level where a turn can happen as far as getting short-term oversold. We're only 20-some handles, 25 handles below the 200-week as far as this S&P 500 goes. If we snap that low, that's going to snap down. Then that means that this part of it over here, the VIX, is going to put in what we call a potential blow-off top coming up in its trend cycle. And this is all trade management. And the only way that it's going to be verified is that markets don't put bottoms in until they put the big top reversals in. So when we put a big top reversal in 2010 and we came all the way down, that's when markets made their bottoms. The same thing will have to happen again, is that if we peak higher here, a blow-off top reversal with a dropping down to support levels down in this area. So if we drop down in here in the S&P, into these trend channels down in here, okay, these weekly levels, and it holds, then that means that the VIX is going to pop up to its upper end, and then we would be looking at where that knife hook reversal happens off the bottom over here, just like it did here in this week. But then within the trade management, it's only 10 days, is that we said sell short back down. So we're going to look for this new weekly volatility. Is what kind of upside volatility do we have? Is it a blow off bottom? Is it a blow off top over here? And how the market stabilize moving through the next 2 5-day trading periods. We are getting oversold here as far as the weekly sell signal on the S&P. We're getting a little bit overbought in the short term over here in the fear. When we're elevated, short sells work wonderful. When they reverse like they did here, When they reverse, markets went up right here. So what I'm saying is the S&P 500 relative to the VIX is that there's going to be a trade management pattern A, B, and C that goes extremely detailed into entries, exits, and what the risk is and where things start to change as far as trend cycles go. From a bear bottom up volatility trend is what we're looking for. And we have 10 days. We have a top here and a lower high here. And then again, that's at a lower low here, and this low never took out that low. They're both, and it's going to be major, but the technical damage on the S&P is horrendous. Somewhere we're going to look again where either the volatility in the broader price ranges increase or they decrease. If they decrease in price volatility, then that means that this is going to have a harder time going higher, and we're going to hold the bottom over here. If we hold the bottom over here, we're going to reverse here. We would have to bounce off the bottom for that reversal. We will do the trade management starting Monday. We will take a look at bear ETFs, bull ETFs as well. But this is a major event that's happening right now where shorter term market price action cycles can either exasperate or get support and then turn up. Once again, MMTs, it's been a pleasure with you on this Saturday morning, so that you have a clear vision here as the severe technical damage and closing below here, and how we are closing on the high here, and how the next 10 trading days will be.